Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, so let's take a look again on the gold market. As we have said yesterday in the Forex report, in today's gold report, we keep talking about the problem of United States debt, but we have taken a look in a bit kind of the macro picture. So it's more relates to gold market and how it stands in relation to geopolitical situation. Because we think that the recent meeting of the Xi Jinping and Joe Biden was really epic event and will make impact on the global politics very soon. So it's not some long-term story, but we could see the early fruits of this meeting even this year, but definitely in the nearest 2 months, December and January. Because in January it will be the elections in Taiwan. So it's definitely situation should start changing really fast. And all the stuff definitely makes impact on the gold market. So in today's report, we have actually explained what particular Xi and Joe Biden talked about, why this is important, how it relates to the gold, how it relates to the United States debt. And so that's really interesting stuff. I hope you will get some pleasure to read. So speaking on the short-term perspective, yes, with this ongoing political events, recent upward action that we see currently on the gold market is definitely could become the upward continuation of the major tendency. But from the technical point of view, this context is not ready yet. Just because daily trend still remains bearish by far, as you can see. So market hasn't taken out the top and hasn't changed the trend in the bullish direction. And by this reason, market still has theoretical chances to show the two-leg downside retracement. Second moment is if even this retracement will happen, it will not change the bullish context on high time frames. So it will not break anything, and from that standpoint, this is also makes it possible. This upward action might be treated also as just a reaction on a strong confidence support. So market just hits the support, shows the bounce, and theoretically it could try to show downside extension. So at least currently these chances exist. That's why, although we keep in mind that this might be just a continuation of this one, but at the same time, currently at this point, we're not ready for taking the new long position because we need a bit more confirmation of our suggestion. So if you take a look at the lower time frame, you see other reasons why it makes sense to wait and see what will happen. So as I said here, we do not have the bullish trend yet. On the fall time frame chart, take a look, market has tested this upper border of the widening consolidation, as we mentioned it in last week. And on Friday, you can see that market has formed bearish engulfing pattern. Maybe this will not trigger clearly the A, B, C, D that we suggest on the daily chart, but at least some deeper retracement might happen, and we will keep watching how it will go. So at least currently, since you have the bearish engulfing on the daily, on the fall time frame chart, it's definitely not the pattern that you would like to buy. And if you do not want to sell, that's fine. If you, for example, you do not trade on intraday charts, and you consider taking the long position, but definitely this is not the pattern that you should argue against. And in this case, it would be better just to sit on the hands and see when this downside action is housed, or maybe if we will get really A, B, C, D to the downside, that's just could give us much better entry level in the long-term picture. Additionally, on the hourly chart, we also see two moments. First of all, it might be Gartner's typical to sell that we discussed on Friday. On Friday, actually, we talked just about the ABCD pattern, but if you combine just with this previous downward action, you easily could recognize this possible Gartner's typical to sell pattern, which suggests at least the 30% retracement. And second moment, take a look. Here's markets taking shape in kind of the hand and shoulders or something that sort of, which also makes us to not taking the long position by far. So that's been said, although the overall picture looks positive on the weekly chart, on the monthly chart, and the general market could keep going higher in the nearest time because overall fundamental background supports this. At current moment, this moment, and on the picture that we see right now, it seems that we need to wait and probably should get better entry opportunity for taking the long position. Scalp traders, if you trade on the intraday charts, theoretically you also could consider patterns if you would like to, as a background for possible scalp short positions. If we'll get the hand shoulders, we have the engulfing, so this will be alternative setup. But since our major tendency and trend stands in upside direction, we're mostly focusing on opportunities for taking the long position. So, and current picture tells us that time is not come yet for buying.